The government continues to change the rules on PPP loan forgiveness and the rules that apply themselves. Recently, we've talked to a number of different people that have information about PPP loans. How do you get them? How do you get the loans forgiven? What documentation you need? Today, we're going to talk to Ken Hughes, the founder and managing partner of KHA Accountants, and this is the Mortgage Banking Livestream. Hello, it's Troy Garris here with the Mortgage Banking Livestream. We're here to educate people, connect people, and entertain. Have fun with this. It's a live stream, so anything can happen. Couple shouts out as we get started. The Texas Mortgage Bankers Association on September 14th and 15th is having its third annual symposium. You'll want to get connected there. It's a great event, some great content, some great speakers. They have currently a risk-free registration process. So if it turns out that this coronavirus world ends up in a cancellation of the event, you can get your money back. Check out the Texas MBA. It's at texasmba.org, and you should sign up today. One other item, the CFPB, as I mentioned the other day, released its notices of proposed rulemaking, 2 of them, in connection with the GSE patch. And you will want to get involved and make sure that you get your voice heard there. You can do that either individually as a person, you can do it through your company, or you can get involved with like some organization like National MBA, which is working closely with the CFPB and making comments in that regard. If you have questions or comments that you want us to address on this show, if you're on YouTube, our information, the contact information, is right in the links just below this live stream. You can text us, you can call us, you can just comment, and we will try to get your questions answered. Mortgage. As we've talked about before, the mortgage banking industry is strong, but it's evolving. And each week, the information, the data that's coming out is very different. Every day, there are new changes. Every day, especially in this COVID-19 world, things are happening, and they're all happening from different angles and in different ways. New home sales, the report from May is that new home sales jumped 16.3%. That's a strong new home sale market, and that's good news. That information comes from HUD and the Census Bureau. And so that's positive news. It's better than what we've seen in the past. On the other hand, NAR reports that resales fell close to 10%. And so again, there's this mortgage market, this home sale market that continues to evolve and is going in different directions. It's typical, but it's especially volatile right now. And so we're going to have to keep an eye on that, and we'll keep you informed as we go along. Mortgage applications similarly dropped last week. Now, this is the first time that mortgage apps have dropped in some time, and they dropped by 8% from a week prior, according to the MBA. This, again, is that evolution of the marketplace. And so as you stay in your market, as you work through your industry, it's really important that you make sure that you keep those contacts and those relationships nurtured, because this is an area where people are seeking out information. And you want to make sure that, for example, loan officers, you want to make sure that your referral sources are well informed, because they don't have the same kind of information that you have. So that's something that you want to make sure that you take care of. Forbearances, this is another bit of positive news. Forbearances, for the first time, since this information has been tracked, first time since March, forbearances are actually down. They've been growing every week as we've been talking through this. First time since this data has been kept that the forbearance numbers are down. It's down from 4.3 million to 4.2 million. That's still a big number. There's still over 8% of loans that are in forbearance. This is creating real pressure and real strain on servicers, in particular default servicers, but it's an area that you need to keep focused on, especially in the servicing industry, but also as you're originating, to be thinking through what sorts of steps this might be having, and what sorts of issues your borrowers might be facing, or you as a company, if you're selling loans to servicers or to investors, what kinds of issues you might be having just a month, 2 months, 3 months down the road. as I mentioned before, mortgage banking industry is still strong in hiring. And as I've said before, part of the mission of this live stream is to connect people. So I get lots of people contacting me that say that they are hiring. So if you're in the mortgage industry looking for a job, I can connect you with people that are hiring. If you are a company that's looking for people, I get people contacting me saying that they are looking and they are trying to find ways to connect with people. I do this just as a service. It's free. I just connect people, let them do whatever they do, talk to each other, but I can help you connect. So if you do have information or need information in that regard, just let me know and I can connect you with people. So optimism in the mortgage industry, but the cases of coronavirus in the South here, we're just hearing continue to increase. This is an evolving marketplace and this is an evolving time. And so we need to keep in touch and make sure that we stay alert to the types of issues that come. Thankfully, many of the states have come out of their mandatory quarantines, at least to some degree. And hopefully a lot of those businesses, the smaller businesses in particular, have been able to weather through the storm. Some of them, not all, some of them were able to get PPP loans, which at least for a time period have been able to help them sustain their businesses in these times of economic hardship. But those rules surrounding the PPP loans continue to evolve. So today, I'm very happy to say that I have a good friend of mine who, and also just the premier CPA in this space and works with a lot of mortgage companies. And he is right here in the DFW area. But Ken Hughes from the CPA firm of KHA Accountants is here with us. I'm going to bring Ken on. He can tell you a little bit about himself and he can tell you a little bit about his firm. And then we're going to dive right in and get into the PPP developments because it's changing every day. So Ken, welcome. And thank you for coming on. Thank you for helping out. And tell us a little bit about yourself.
Thank you for the invitation, Troy. I've enjoyed working with you and Richard and your partners and your staff. You have a great firm, and we really appreciate what you do for the mortgage banking community. And I mean, I started originating loans in 1994, formed a mortgage company in 95, and sold it in 2004, so it was good timing. But over the years, I made a lot of good friends in the mortgage business and learned the hard way on what it takes to make it work. But like you, making a difference is why we stay in this business. KHA, it's a firm that we have audits, consulting, tax. We have one of our largest segment specializations is mortgage banking, of course, because we do a lot of audits for HUD, Fannie, Freddie. We have 30 CPAs and a staff of about 50 people. We have offices in Flower Mound and Denton, Texas, but we serve people all over the country. And our primary all over the country client base is mortgage bankers. And so we've had a lot of fun with those guys and we've helped with the PPP assistance. We implemented here, tax season got moved from April 15th to July 15th this year. So I implemented the SOS program, Save Our Summer. And unfortunately, I don't think we're going to get to save our summer because the PPP has taken precedence. And now I think we're going to get back to the 80-hour week for tax season for the next month at least. So we'll see. But, as part of this pandemic, we've realized we don't need as much space. 85% of our people are working from home. And I think we'll probably continue that even after this pandemic ends because it's worked out well and people are still productive. And I was from the old school of, no, we're not going to work from home. But man, it's worked out well. So.
Yeah, we've had a great experience with that too. Yeah, when I was first getting this firm together, I know you and I talked about it, and we just went digital from the beginning, and so we had an easier experience. But I hear from so many people, just like yourself, that say, they are realizing that they don't need all that real estate. So there's going to be an evolution there in the real estate, especially in the commercial space, I think, real estate market as well. It doesn't mean it's going to die or anything like that. I'm not even suggesting that, but it is evolving, right?
It is evolving, and people will just need less space. But they're still going to need space to meet with clients.
Right. Right.
Anyway, with the COVID funding and tax issues, we've all learned together that what we read yesterday may not be the same thing we read today. And I know you've had guests on here before that talked about PPPs. Just probably all of our audience has either looked into it or has a PPP loan or has considered it. But it's ever changing. Every day we look at it. And so hopefully with this time we have here, look at what are you going to do with the PPP? You don't have one yet. You've got 6 days to get approval. So you really need to get your application if you don't have one in the next few days, because June 30th is the final day for approval from the SBA. And so we're not going to deal with a lot of issues today, but what I wanted to deal with specifically was how do I book the loan? What's forgivable and how do I compute it? Who do I need to deal with on the forgiveness? What about full-time equivalents and headcount calculations? I mean, hopefully we can give up a little guidance on this in the next few minutes, because we jumped into it 2 weeks ago. It's changed since then. So,
right.
Interesting information. As of June 20th, there were 4,666,560 loans, PPP loans, for just right at $515 billion from 5,456 lenders. So you can get a ton of information about this on the SBA website. So I'm not going to go through all of it, but I thought our audience might find some of this interesting. There's still $128 billion of funding remaining. And it's interesting how the banks are dealing with this. The largest lender is JP Morgan Chase with almost $29 billion in funding, with the average loan size, get this, of $109,000. So Chase was one of the last large banks to get in the PPP program. Because of their moving targets, they would only let current depositors onto their website. And their answer to many people was, yes, you can apply, but you have over 1,000 applications ahead of you. So how would, as a former mortgage maker and an auditor of mortgage maker, how would we survive if we told all our applicants, yeah, you can apply, but there's 1,000 people ahead of you? It's crazy.
Yeah.
The banks can't collect fees from the applicants, but they're paid 5% for loans of not more than $350,000, 3% for loans of more than $350,000 and less than $2 million, and 1% for loans of $2 million and over. But the interest rate's only 1%.
Right.
And so depending on how long the loan's outstanding and not forgiven by the SBA determines the true interest that they're earning. And most of the banks have collected the monies for the loans they funded through May 31st. And ideally, the banks wanted all the $349,000 loans they could get. But in some cases, the loan amounts were under $2,000. I saw one that was $1,300, and they lose money on that. So I see the banks want these things to be forgiven. And Mnuchin came on last June 10th and said, our goal is to get as many of these loans forgiven as possible in the next 2 months. And so I think that's going to make a difference. And I think we're going to see a lot of these loans forgiven. But, it's still a slippery slope because of the changing rules. Most of most of the rules. So we'll just touch on a few high points. And really the purpose of this is, if we mention it, you need to look into it, because that's how important it is.
Right.
And so you need to be sure you know how to calculate the way you book these loans. And it's a good way. Cash and note payable when you get the money. When it's forgiven, it goes to take it off of note payable and move it to other income in your income statement. And so right now, the PPP loan that's forgiven, normally forgiven loans are income to you. Right now, the loans are not income to you for tax purposes. However, the expenses that you paid with the proceeds are not deductible for tax purposes. Now, there's several people in Congress that are floating around bills talking that wasn't the intent, that they're going to have to change the law. The IRS came out and said under certain code sections, this cannot be deductible because you paid for it with tax-free money. But what the Congress said is, hey, look, that's not what we intended. We'll fix that. So hopefully we can get it fixed and we can all double dip on those if we got it. But right now it's a good way to book it. AICPA recommends that GAAP will be booking it to other income on your income statement. And so hopefully we'll get that change. I was listening to a presentation yesterday about some of the changes that just came out Monday night. And the guy who was presenting said, look, it's going to be hard to get anything forgiven immediately because trying to compute the forgiveness amount is like trying to pin Jell-O to a wall. And I think he's right. And because there's just so many unknowns out there. So we'll kind of go through the process. The forgiveness app is submitted by the borrower to the lender. And then the borrower, those of us that took the money, we compute the forgiveness amount, we certify that we've done all the proper procedures. And then the lender reviews the forgiveness app with the certification and all the documentation that you'll have to give them. And they may request more information. They have 60 days from the time you submit that information to make the determination of whether they need more info or not. If they need more info, they get another 60 days. And they may approve all or part of it or deny it altogether. It's just what the bank is going to look at. And we're going to get into some of that in a little bit. The SBA then gets to look if they so desire, and they have 90 days to approve or deny forgiveness. So it could take up to 150 days. SBA will look at all loans over $2 million. I know you guys have known that. But they have up to 6 years to review it. And their review looks at borrower eligibility, appropriateness of loan amount, whether proceeds were spent on allowable uses, and whether the forgiveness amount is correct. So the advice here is don't play games with the forgiveness amount. Follow the rules, get it done properly, because if you are caught playing games, no forgiveness, personal liability, possible fraud with criminal and civil penalties. So it's not something we want to do.
Right.
Okay. Remember, there are payroll and non-payroll costs that are forgivable. 60% of the cost must be payroll. Now that's down from 75%. That just came out this weekend. So payroll is basically gross wages with limitations over 100,000 per employee. Employer paid group health insurance. You know, it's not just if you reimburse someone for health insurance, it's got to be group health insurance. And then employer-sponsored retirement plans, 401ks, SEP plans, things like that. So if the employer makes retirement contributions, that's a forgivable cost. And state unemployment, not your matching Social Security and Medicare, not any other payroll costs, not payroll costs that you pay to a processor, ADP, Paychecks, those kind of guys, just what we mentioned here. So the non-payroll costs, the SBA is going to look at whether those are reasonable or not. But and so you don't want to play games with those either. But mortgage interest with some limitations, rent expense, and then utility payments, and that's electric, gas, water, internet access, and transportation. Transportation is not defined anywhere. So there are a couple of examples of transportation being possibly leased vehicles and the gas related to it. But since it's not defined, we don't suggest that. Okay, the Paycheck Protection Flexibility Act that just came out, when it tripled the duration of what you could use. So remember when it first started, you had 8 weeks to spend the money and then apply for forgiveness. Well, that's all changed. You can still choose the 8-week period, or you can choose a 24-week period. Okay, when we changed to the 24-week period, the $100,000 annual payroll limitation changed, and we didn't know whether or not we still stuck with $20,833, or there was a $15,385 limit on those over 100,000. Now, if you're a non-employee, that number becomes 46,000. I mean, if you're a non-owner, that becomes 446,000. If you're an owner, it becomes 20,833 for the limit on the 100,000. So I know you're getting fed with the fire hose here, but one of the most important things is compute these things properly. And if you know these rules, live by them, or get someone to help you.
I think mortgage bankers are usually pretty good about this stuff, but I think the documentation is key, right?
Right. The documentation is key, and working with your bankers, and that's one of the things that the bankers, they've all kind of wanted online forgiveness applications. I don't know of a bank that has one yet. I don't know of anybody that's actually taking forgiveness applications yet, because the rules are so in flux. The Treasury did come out and say that they expect over 30 frequently asked questions to be, the answers to frequently asked questions to be published this week. That's what they said last week. So we're hoping for it this week. And it should answer a lot of these questions. The SBA and the Treasury revised the forgiveness application. And so it just came out as well. So there are several things on the application instructions that seem to be law, but they're not statutory. So we don't know whether we can stick with the application or not, or whether these frequently asked questions are going to basically give us part of the interim final rule that answers some of these questions. So, I mean, also remember, there are safe harbors for excluding salary and hourly wage reductions in the number of employees. You have to look at your overall pay to employees and any reductions that you had, and then the full-time equivalents for people, and that's computed by people working 40 hours. And so if those dropped, so does your forgiveness amount drop. You did have until June 30th to rehire someone. Now you have until December 31st. The June 30th timeframe went away completely under this new Flexibility Act that was just passed. And so you have until December 31st to replace your employees and get your workforce back up. That created a problem as well, though, because do we now have to wait until December to apply for forgiveness? Well, we expect that to be one of the answers as well, because they did come back and say you can either use the full 24-week period or earlier if you used all your money and used all the loan proceeds for forgivable items. So, but they didn't say what would happen when you said or earlier. It appears that what we're hoping for in the frequently asked questions is that they will tell us when your application is submitted, if you've upped your payroll and your payroll costs and your full-time equivalents to equal what it was on February 15th of 2020, then you can get full forgiveness out of it. You don't have to go back, or you don't have to wait until December to determine your head count. We don't know that for sure yet. So we're monitoring that daily. Remember, you can choose between 8 or 24 a week. If you've already spent your money and you don't have a reduction in headcount and you don't have a reduction in payroll, as soon as they start accepting applications, I would suggest submit that application and get it done. If there's any of those other things that are relevant to you, you might want to elect the 24-week period. Gives you more time to spend some of the money, gives you more options, gives us more time. I don't want to say jump in, but if you know what you've done and you can get it done and get it forgiven now, do it. But most people, we're telling, wait for the 24-week period, give it some time, let's get more guidance, and then we can better address it. So it all boils down to this. If you spend the money apply for the forgiveness. If you haven't spent the money, or if you've got lower costs, lower head count and lower payroll costs, wait.
Does that have to be is it a toggle switch? In other words, you have to have an 8-week period or a 24-week period, or could it be somewhere in the middle? Like, could you opt for 24, but if you spend all the funds in, say, 14 months, then that's the end of it?
Yeah, it's either 8 or 24. And
Okay.
that's what I was saying. It's not a toggle switch. What the guidance that just came out said was, when you spend all your money, if it's after the 8 weeks but before the 24 weeks, then you can use that time period, whichever is earlier. When you spend all the money, but actually they use the date that you apply for forgiveness,
Right.
not when you spend all the money. But you're gonna apply for forgiveness shortly after you spend the money.
Right.
So it can be 12 weeks, it can be 16 weeks. They moved it out to 24. What we don't have specific guidance yet on is, where do we look at the covered period for employees and for headcount and for payroll? And we believe that it's going to be after you spend the money, whatever date that is when you make application, that's the date you'll use for computation of your full-time equivalents and your pay. But it's not just 8 weeks or just 24. It's in between there, but we don't have guidance on the in between part. So that's what we're working on.
Yeah.
And hopefully we'll get there. Okay, so don't forget, June 30th is the final day if you don't have money, if you haven't applied for money yet. You do have to make certain certifications, and we are seeing unprecedented times. The original application said you have concerns about going forward. I think we all do. But if you've got other funds available, that's a determination you'll have to make, and that's why some of the people haven't made that application yet. But most people that have, if you're thinking about it, get it done in the next couple of days. If you know you're fully compliant right now, you've already spent all the money, take that 8-week period and get it to your lender, and as soon as they start accepting those applications, get it forgiven. Either way, be sure you're accurate on your computations. Call your CPA, have them help you with it. We're helping a lot of our clients with it. We designated 6 of our consultant CPAs and MBAs to just help our clients get through this and get through with it accurately, because it's a thing you don't want to miss. Paying tax on this or having to pay it back can be an issue. So
Right.
it's a good problem to have. I'm glad they stepped up and did this. When they first came out, I thought, this is crazy. Why are they doing this? But there's a lot of people that have made it because of this. So
Right.
I'm glad they did it, but we need to take care of business before it's done.
That's right. And I think again, just our clients and friends are usually pretty good about this, because mortgage banking in general is so heavily regulated as a general matter that they're usually pretty good about documentation. But a couple of things I would point out: one is to make sure you document, and 2 is to make sure that you have your people, whether somebody like Ken or whoever, helping, because this is rapidly developing and you got to get it right in order to maximize the benefit to you. And then also, one thing that I see sometimes is that people take those certifications lightly, and those are, they are certifications to the government. And like Ken said, if you make a certification and it's not true, or you're sloppy with it, that can get you in a lot of trouble. And a lot of times people aren't intending to make any sort of false certification, but they're sloppy, and you really have to read that before you sign your name on the dotted line there.
Right.
Well, Ken, I don't want to take up a ton of your time. I know you're super busy, and I appreciate you coming in, especially during the elongated tax season. Any last words before we jump, or any other comments or issues you want to bring up?
No, just thank you for allowing me to be on with you. Appreciate you. Enjoyed all the fun things we've done and look forward to the future.
Yeah, same here. And I'll point out just as we close out that Ken's daughter is also a teacher, frontline, involved in helping students and helping our community, and Ken as well. And we thank you and your whole family.
Thank you, Troy.
Okay, we'll talk
Appreciate it.
soon. Take care.
Great.
Goodbye.